Hello, good morning. It's Thursday the 21st. I'm FX Plu, and this is the market brief. So the outlook for sterling lies rather in the hands of the Bank of England at the moment. Their plans to tackle inflation will impact the currency. And they have their work cut out ahead of their next meeting on May the 5th as well, because it's hard enough to bring that inflation level back towards the 2% target, especially with the higher energy prices filtering through to consumers already. But that challenge is made even harder if you also want to retain economic growth. The UK could easily tip into a recession if the Bank of England policy action is a little too aggressive. The CEO of Scottish Power has been on. He's told MPs that the energy industry is concerned about the impact of the next price cap rise later in the year, and of course the implications for the consumer. The industry fears that the situation is becoming too big for them to tackle on their own, and he called for the government to step in with a better solution that would help protect lower income families from the savage impact of even higher energy bills later in the year. In the market, sterling touched 130.70 against the dollar yesterday. Mini rallies like this are being seen as selling opportunities, as there's pretty firm resistance around 130.80 at the moment. We open around 130.65 this morning, and we are around 120.40 against the euro. Over in the US, Fed officials seem convinced that the US economy is strong enough for them to aggressively address inflation. Forecasts suggest that they may raise interest rates to about 2.5% by year end. Supply chain issues still exist, and the global shortage of semiconductors remains a real concern. But overall, the economic risks remain heavily skewed towards inflation and rising inflation at the moment. Producer price inflation is a useful leading indicator. This shows the price structure at the factory gates, as the saying goes, and it will trickle down to consumer price inflation in due course. That rose to 11.2% last month, so CPI still has a lot of inflationary pressure building up behind it. As such, market expectation is for the Fed to crack on with a 50 basis point rate hike when they meet on International Star Wars Day. May the 4th be with you. The dollar index pulled back a little from recent highs. That closed at 100.30, suggesting that the 100 level is now a bit of a line in the sand. But with no real data due that could act as a driver, it looks likely that things will drift into the weekend a little. Euro dollar opens this morning at 108.50. Right, that's it from me. It's been downhill all the way. I've got to turn around and hope the battery lasts. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.